Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with the April 9th stock market wrap up for you to use this weekend. Shockingly, as I don't know why, the stock market's closed Friday. I'm only now finding this out because instead of using my common sense and knowing that Pesach is Wednesday, was Wednesday, Passover, and that we have Easter and Good Friday on Friday, somehow I just happen to forget that we're always closed. So I go to look at my Interactive Brokers little calendar right here that you can hear me playing with, and it completely shows here April 10th. Blue means United States holiday, and there's no blue. So either maybe I have a wrong year one. Let me check just to make sure. I could. It's always possible. I just doubt it. How do I even know what year this is? 2009. There it is. Pardon me, 2009. So it is the right calendar. So anyway, let's just go ahead and go on. We are closed on Friday, so the good news is you're not only going to get this video as your video 1, but you're going to get a video 2 and a video 3 and others, because thankfully on Friday we had a very good session where pretty charts like MIPS showed up. Do you know what MIPS PSs me off about it? Look at the BOP down here. Why isn't it max green BOP yet like it was in November, December, and then January to February? How come with all this strong, heavy accumulation, there is no max green BOP? I guess it's going to need bigger days, but, you know, I really love charts like this, and I'd really hate to not love them anymore because they're going to lose, you know, that beautiful green BOP. There's a few stocks that I'm long that have that similar pattern, but a couple that I'm not long that I'd like to talk about are like Smith and Wesson Holdings. How can you go from having max green BOP, initial part of the uptrend with excellent accumulation, to just kind of ruining your chart pattern even with low volume? It's just something that I'm not used to seeing. I mean, I guess I am, but really, I'm not. I really am not. And then there's another one. There's another one that I want to show that did this. Well, here's just one that I can think of. SBAC. SBAC, you're starting out nice with green BOP. Man, it sure would be hot and pretty if you could keep your max green BOP, especially after you took the 200-day moving average with a strong move back green BOP. Nope, too bad it couldn't hold. Now we're back to yellow. So Smith & Wesson, that one is another one. Another recent one I'm watching is PMCS. Look at that one, lose it. So hopefully beautiful charts that I'm watching that I love like this, that you lucky free viewers are getting to see today to finally see what I like showing up. However, I'm not going to show you my longs. And since this isn't max green BOP over here in March and April, you know that I'm not falling in love with it, so I'm not really missing out on showing you anything. Still, I don't like looking at it, and Netflix is just another one. Great stock, had the green BOP, but where did it go? Almost had the max green BOP too early on. I mean, look at it early on. I mean, it was looking great. Should have taken it right there. Should have been my buy. Had I bought it there, even with the week close, just doing it because it was a Can Slim stock, my dumb behind would be up 30%. So, live and learn. Now, let's hit the indexes because that's what this part's about. Look at the New York Stock Exchange bouncing right off the 50-day moving average. Having an open body bar. Let me go to a Zoom 9, go all the way out in the plus sign. And can you see where we close? 5376.44. Can you see what the high of the day was? 5376.98. We were only right around 54 cents away from a new closing high. So that's pretty amazing. Look at how bullish that candle is. Also, what's up with the volume over the 50-day volume average again? Very beautiful. Continues a trend since the March lows. Since the March lows, the NYC is up 27%. I gotta admit, for the year, I do have a gain now, but it's tiny. It's only like 1%. Compare that now to NYC, it's down 6%. I'm still winning. However, considering the 27% rally we've had here, you would think that my accounts would be up about 20 to 30 to maybe even 50%, because that's the norm, folks. That just is. You old-timers know this. You You guys aren't even questioning it. You new guys are like, really? Yeah, really. But still, let's just go ahead and know that this is a very nice looking chart so far, the way it's bouncing off the 50. Now let's look at its brother, basically the S&P 500, which mimics it almost to a T. Another excellent move. Look at that. Look at the going all the way out in the plus sign. Zoom 9. Look at the close. 856.56. 856.90. That means we were only like, what, 35 cents off the high of the day. And plus, it looks like 82929, 82929, the low of the day. So we almost had a complete open and low of the day at the open at the low of the day, close at the high day, S&P 500. Once again, I want to show you that volume well above the 50-day volume average. Here's a weekly chart showing you the last 1, 2, 3, 4, 5 weeks. Volume wasn't above average that time. Let me see on the NYSE if it was. Nope, but still, bottom line looks excellent. Now, while we got the weekly chart up, let's go ahead and throw up the Dow Jones Industrial Average. Dow Jones Industrial Average, as you can see on the weekly chart. 1, 2, 3, 4 weeks of way above average volume, and then a 5th week of above average volume. So obviously some accumulation recently. Here's what it looks like. Let's tighten it up a little bit so you get the 200-day moving average in there to see where it is at reference. The move off the lows, they were initially on good volume. My only problem was, just like what I'm going to show you the NASDAQ is, the Dow Jones is up 5.8% and up 6.8% in one day. It's not how great bull markets start. However, if this wants to start like this, dude, do you really think I'm going to complain? Do you really think I'm going to be like, oh, guys, I can't believe in March I told you that it was probably just a bear market rally and I'm wrong. I feel so stupid. I don't feel stupid. I could care less. I want to make money in the stock market. I told you, opinions are opinions. They don't mean anything from me. They don't mean anything from you. They don't mean anything from anybody on TV. What matters is the charts. That's what I pay attention to. The charts told me that this was a bear market rally at first, and especially right here, the 6.84% move in volume lower than the day before. But right now, we've got things that have changed since then, which is just odd, which is great. There's nothing wrong with it. It is the way it is. That's how the market works. Anything and everything can and will happen. You people out there that say, this can't happen, that can't happen, that's never happened before, so it can't happen now. Yes, it can. Stop it. What's wrong with you? It's just relax, everybody. I mean, anything can happen. So first we had our awesome accumulation day on the 23rd of March. Then we had it on the 25th of March. Then we had another one on April the 2nd. And then one today is beautiful of the 9th. And before that, look in between 4.2 and 4.9. Lower volume, some kind of, consolidation. Lower volume consolidation. Big pullback. Lower volume, higher day before, but still tiny. And then boom. Boom, look at today. Today was an options expiration. If this calendar is right and not wrong like it has been, the 17th is options expiration, of course, because the 17th is the second to last Friday of the month. And the second to last Friday of the month is always options expiration. So I would just hope that this is right. I mean, gosh, it would just be shocking if this thing was actually wrong. It just probably can't be. So now as you see a 200-day moving average, let's look at the NASDAQ. Look at the NASDAQ. This one's perfect. This is a beautiful chart. Now, is it as nice as this index I'm going to throw up, the Shanghai SE Composite? Hell no. Look at off the lows of the Shanghai SE Composite. The index, if you go to the highs, is up 41%. If you look at the NASDAQ off the lows, which has been the strongest index in November to the highs, is that a 40% move? Is 25 anywhere near 40%? No. But look at the relative strength line compared to the New York Stock Exchange, which is what I always use as the relative strength line. As you can see here, RS, S&P 500. If you want to see how you edit the indicator, plot and window bottom comparison, S&P 500, you can see all that. Anyway, let's see how much time I have. Don't want to mess up too much. Good, 9 minutes. Anyway, you can see them bounce off the 50-day moving average support area on strong volume back here on the 23rd. Heavier volume there. Heavier volume here on the 25th with an excellent intraday reversal. I told you it was very bullish the day that happened because leading stocks took a big part of the rally in the last end of the day rally. Then another higher day, follow through day on higher volume, 2 pullbacks on lower volume, another jump on higher volume, even bigger volume there on the first. Then on the second, Wazoom. Look at that move on that volume. And then another great day, lower volume. Then we started to get a pullback. We had 2 days of a pullback of 3.72% leading into the 7th. That was on lower volume. Then we had a kind of a mixed day, only up 1.86% today. But today, kaboom! Kaboom! Just like Billy Mays here, kaboom! Billy Mays, kaboom, you're right. Doing a plus sign all the way up, showing you on a 9. High a day, 1652.54. Close of the day, 1652.54. Low of the day, 1616.25. Baby tail, 1618. Open, but that 1652.54 close, 1652.54 bar high shows me that going into the weekend, man, these guys want to be long, which is just something that you don't see. But look how close the 200-day moving average is. Now we're getting right there, so we're almost at the halt kind of point.